Try to make it as simple as I can. Starting about a year ago, the 8 large traders, which are the traders that control the prices of silver and gold, began to recover their short positions in both those precious metals, especially in silver. So starting about, March or April of last year, we've had a gentle rise in the silver price, and the simple reason for that is that the 8 large traders, the bullion banks and the investment houses that control the price of silver, have been very quietly going into the market and buying up long positions to cover their short contracts, because they're mega short. And this act of buying long contracts is what got the price going gently higher. And this continued right up until things really started to move to the upside about September of last year, when the buying became far more aggressive. And the big 8 shorts continued to cover, but starting in about December, it started to go parabolic, and that's when the speculators started to pour into the market. So not only were the big 8 shorts in gold and silver continuing to cover the short positions, there were also new speculators coming into the market, and they drove the price up to, $120? And let's just concentrate on silver, up to $120 in silver at the end of January. And at that point, it was about to run away to the upside, and the big 8 shorts, even though they had covered a lot of short positions, around 40,000 contracts, the big 8 shorts are still on the hook right now for about 45,000 contracts, and they were getting into some sort of financial difficulty, not only in silver but also in gold, because they had margin calls to meet and things like that. So, this thing would have run away to many hundreds of dollars an ounce if they hadn't stepped in and killed the price over the next couple of days. So, which is what they did, and they knocked the price down to $70 in 3 or 4 days. It was like unbelievable. But the only reason the price fell is because the big 4 shorts came in there and absolutely killed the market. It didn't happen because of lack of demand or investor enthusiasm. It came about for the same reason we always have these, what I call wash, rinse, and spin cycles. The price runs up and then it gets killed. Price runs up. And we've seen this movie play out many, many times over the last 25 years that I've been watching these markets. And the interesting thing about it is that at the low, on January 29th, the Commitment of Traders report that came out, it's a week late. And at that time, the short positions held by the 8 largest traders in both gold and silver were at all-time record lows. So they had succeeded in covering a huge amount of their short positions. But, the thing is that they still have huge short positions left. The 8 large traders in gold are short, 17.5 million ounces of gold right now, and about 225 million ounces of silver. So these guys are not off the hook. They can never cover all their short positions, but they got them down to a very, very low amount, a record low. And since then, the prices of silver and gold have been sneaking quietly higher. And of course, as the price rises, which means that people are buying long contracts expecting the price to rise, and it does rise, and they come in, and we've had a couple of mini rallies and a couple of mini crashes since then, and that's just the wash, rinse, and spin cycle on a 2-week cycle rather than on a 10-month cycle. So they built up their short positions by a little bit, but even though we're just barely off the lows, and this big engineered price decline we had in the last 5 days was an attempt to reverse all the short positions they put on since April 7th, and I think they were mostly successful. And we'll find out on Friday in the Commitment of Traders report. So, we're back at rock bottom for a short position, and the commercial traders, they can huff and puff all they want and try to drive the price lower. But if all those traders that are on the long side, there comes a time, as Ted Butler pointed out, that they're not prepared to sell any more long contracts, and they're not prepared to put on any more short contracts at the current price. So the commercial traders can spoof and pull their bids and do whatever they want and maybe drop the price 10 or 20 or 30 bucks. But the managed money, all the rest of the traders that are long, say, we're not selling. We're not prepared to sell any more longs to go short. And when that happens, the big 8 can huff and puff all they want, but the price isn't going to go any lower. It's the act of selling a long contract or going short that causes the price to fall. And if the guys that are long who don't want to sell any more longs or go short, the bottom is in, And the big eight commercial traders and everybody else that's short cannot cover any more contracts. And now we're at that point right now where we could take off. And as this morning, as today's Wednesday, silver's up. Well, I haven't checked the price, but I think silver's up like $2 and something cents, 237, and gold's up $60, $64.50. And these prices, these rallies will continue as long as the big eight shorts allow it. So, we're at record lows, and we could take off any time from here. So things have, from a Comex futures market perspective, the setup for rallies in the precious metals, gold, silver, and platinum and palladium as well, are the most wildly bullish they've been since I've been following these markets for 25 years. We've had currency debasement going on for the last 25 years. I mean, take a look at the price of gold. I remember gold was $2.50 an ounce, and silver was $5. We'll look at it now. And the value, the purchasing power of all fiat currencies is going down. The bullion banks, who have been short the market for the last 50 plus years, trying to keep its price contained, haven't been doing a very good job of it. But the thing is that, if they weren't dicking around in the market right now or at any time, the prices of precious metals and all commodities would be far higher than they are today. And from a Comex futures market perspective, this is as low as it's going to get. However, if we get a market crash, okay, let's say, Trump and company are keeping the stock markets propped up and the dollar propped up and bond yields as low as they can keep them. But if we get a true stock market crash, there's no question about it. We're going to see, a temporary, like days or weeks, decline in precious metal prices and precious metal shares. So there's a big dip coming up sometime if they allow the markets to crash. But right now, from a Comex futures market perspective, this is as low as it's going to get. And I don't know who coined the phrase, you should buy while blood is running in the streets. This is the time to buy. Everybody is reluctant to buy it. Well, I'm going to wait and then they decide, well, oh my goodness, silver blew through $90. I guess maybe I better get in the market, okay? So they've already lost $20 worth of profit, of potential profit. And who knows how much in the shares. So, as hard as it is to do, and it took me about 10 years of investing before I finally had the courage to do exactly that. And I've never, ever been sorry. I've always been happy that when I took out my money and said, gee whiz, this price is so low. But in the end, it has paid off over the last 10 or 15 years. I've never been sorry I've done it. And if there's ever a good entry point to buy physical metal or shares or whatever, right now is as good a time. I want to cover what is going on in silver in other areas, in the Comex futures market, in the London market, and in Shanghai. It's this year so far, okay, 165 million ounces of silver has been shipped out of the Comex, along with 8.25 million troy ounces of gold. Most of that has gone to either China or to London. And London has been shipping out silver to Hong Kong as well. So, in March, the Comex and LBMA combined shipped out 30 million ounces of silver to China. Okay, and in the last 6 weeks, 38 million ounces of silver has been added to the Shanghai Gold Exchange and Shanghai Futures Exchange. And that represents 13 days of world silver production has just, has disappeared into their inventories, and they keep adding to it every day. We had a big, huge decline in their inventories up until about the end of March. Okay, but since then we're down to about, in both of their depositories, they were down to about 18 million ounces in both of them, which was exceedingly low. It was like a 10 or 11 year low, and everybody was commenting on it at the time. But since then, they've added 38 million ounces to those reserves, and they continue to add, and there's no sign that they're going to let up anytime soon. So what they're basically doing is they're draining the LBMA and the Comex of physical metal, okay? And I've looked at the Swiss numbers, and Switzerland does not ship to China, which I found very surprising. At least they don't ship silver to China. it goes to London, and it's transshipped from London into Shanghai. So, basically we're hearing a giant sucking sound coming out of Shanghai as they hoover up all the available silver out of the LBMA and the Comex. And this is something that I'm watching very, very carefully, because there's a limit. As everybody knows, last October, the LBMA ran out, and they were almost on the verge of declaring force majeure. And of course, starting in last October, I don't have the numbers right in front of me, and too bad, I should have dug them up before I went on air here. They shipped, there was plane loads of silver heading to London every single solitary day for all of November and all of December. So the 138 million ounces of silver that's gone out this year, probably another 60, 70, or 100 million ounces went out in November and December last year to cover that deficit. So it's amazing the amount of silver that's vanished in the last 6-8 months out of London and New York. How long can they keep that up before they get sucked dry? There's a limit. Not all the silver on the Comex or the LBMA is available for delivery. It's owned by people who are like investors like us, who are waiting for the big score and aren't prepared to sell it at $70 or $100 or even $120. So, once they reach that limit, there's nothing more that can come out of the Comex. So, Shanghai is sucking up, they're sucking up copper and everything else, the rare earths, and sooner or later they're gonna run the world dry of silver as well. And as far as going back to your original question with the setup, I just cannot overemphasize. I've been doing this for 25 years, and Ted was doing it for like 40 years, and he was always waiting for the day when there was no more, that the big 8 traders couldn't cover any more of the short positions or were forced to go into the market to cover them. Well, that started last March.